Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about earnings calls, a sell-side perspective. And it starts with this premise. Stop pressing *1 at 4:15 p.m. for a 5 p.m. earnings call. Dialing in that early is not going to get you the preferred spot in the Q&A. And we'll get into this in tomorrow's video in the corporate view. And the second premise is earnings calls are all about visibility in the Q&A. Sell-siders want a question in Q&A so they can advertise for buy-siders to come talk to them. So what are the three components of a successful earnings call from a sell-side perspective? It starts with visibility in the Q&A. Second is high-quality financial guidance. And third is information on strategic vision from management. And so the question is, can I be successful as an analyst if I don't get a question on an earnings call? And the answer is a resounding yes. I rarely got questions on earnings calls and was very successful with my research franchise. Additionally, there are a lot of sell-side analysts that don't want to ask questions for competitive reasons. And so how do you drive success for an analyst if you're not giving them a question on the call? And it's all about management callbacks. Are you calling everyone regardless of their rating on the stock? Are you being consistent with your message, telling everyone the same thing? And thirdly, are you giving those investors or sell-siders an opportunity to understand what they're missing based on the balance of discussions you had as the IR and management team? And so what's a compromise solution for people who don't like the current format of earnings calls? Well, I think it's the following. One is turn earnings into more of a supplement where you have a very detailed supplement product like REITs. And second would be to make the earnings call all Q&A. The more Q&A, the more value add for everybody involved. And so what are the key learnings for public executives here? And it starts with the idea that on the face, an earnings call success for a sell-sider is all about Q&A visibility. It's really about information access. If you're giving access to information to everybody, they're not going to complain about a question on the call. And secondly, if you're a sell-sider, I would encourage you to think that the IR person might be a better resource for you than the CEO or CFO. You might get better, more thoughtful, and better understood information. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.